Effective for the 2026-27 tax year, the Indian government has retired the 1961 income tax framework for TDS and TCS. Mathematical rates and financial thresholds are largely unchanged. The operational compliance structure, however, is entirely new. Under the old system, compliance was built on an alphabet soup of independent sections, like 192, 194A, and 194J, each requiring separate navigation. The 2025 Act consolidates those legacy provisions into just three master sections, 392, 393, and 394. This three-part taxonomy serves as the foundational structure for every return filed under the 2025 Act. Every legacy provision for salary and PF, the old 192 and 192A, now funnels directly into the new Section 392. The updated Section 393 is significantly larger. Subsection 393(1) now absorbs all domestic resident payments, including interest, contracts, rent, professional fees, and crypto. Subsection 393 subsection 2 acts as the dedicated umbrella for all NRI payments, replacing the legacy 194E and 195 series. Subsection 393 subsection 3 is the catch-all for payments made to any person. This covers lottery winnings, partner payments, and high-volume cash withdrawals. All tax collected at source provisions are now unified under the single umbrella of Section 394. Memorizing these three primary buckets is the required mental foundation for interacting with the new e-filing portal. Selecting a section number is the first of two mandatory inputs for e-filing under the new portal logic. The system now requires a specific transaction code, ranging from 1001 to 1092, to identify the exact nature of the payment. These codes must then be matched to the correct form. 24Q is replaced by Form 138. 26Q moves to 140. Immovable property and rent are now Form 141. TCS uses 143, and NRI payments use 144. Without the precise transaction code matched to the correct form, the portal will reject the return and stall client workflow. There are specific policy shifts to note within this restructure. For instance, the bank interest threshold for senior citizens has doubled to 100,000 rupees under Section 393(1). Under Section 394, a new TCS rule applies to luxury goods. Items like watches or cars crossing the 10 lakh mark now trigger a 1% collection rate. Furthermore, Section 393(3) now mandates a 10% TDS on all partner remuneration above 20,000 rupees. Pause the video and categorize this scenario. A 50,000 rupee commission payment to an LLP partner. Determine the section, rate, and form. That payment falls under Section 393(3) at a 10% rate, filed via Form 140 or 144, using transaction code 1067. Combining this umbrella logic with these specific policy updates is the benchmark for readiness under the 2025 Act. To prepare for the transition, start by auditing your tax software to ensure the 1001 to 1092 transaction codes are fully integrated. Next, manually verify the phase-in status of the new forms on the e-filing portal before your next quarterly submission. You should also update your standard operating procedures for luxury retail and partnership clients to reflect these new TDS and TCS hits. To avoid manually tracking all 92 of these codes, you can download the complete master table at the address shown here. Completing this checklist helps insulate your firm from compliance issues when the new